Oh no! Has St. Louis area real estate lost its mojo? All right, so this week's real estate market report for St. Louis area is kind of a mixed bag. Let me give you a little bit of history first. Think back to when the COVID situation really started to ramp up, early to mid-May. So we're about 5 to 6 weeks into that process, and that's when we expect to see some significant impact on the real estate market show up in the numbers. Because remember, these numbers are lagging indicators as to what's already happened. So this week we're going to start with new listings week over week. The previous week we reported 550 new listings on the market. This past week we only reported 358 new listings on the market. Did we have an influx in sellers who had been preparing to go on the market and wanted to get it in quick? That's why we had those big jumps. And maybe now we've got the conservative people that are really nervous about coming on the market. When we look at the average list price week over week, that did make a jump. It did make a jump of about $70,000 this week for the average. It looks like a lot of that was probably higher priced inventory that's coming on and less lower priced inventory coming on. And so we saw an adjustment there. It could also be that sellers have not quite gotten the message that the market is in flux. And maybe they're pricing from the market that we had, not the market that we're going into. Next up, we're going to talk about the under contract numbers. So previous report was 784 properties under contract for the week, which is very high. That is a high, obviously. And this past week, we only put 688 homes under contract. So that's more in line with what's a little bit normal. I tend to wonder if maybe because buyer demand was still strong, if maybe those average list prices being higher for the new listings and so many things having gone under contract previously, maybe we've got really a vacuum and so buyers are just not finding what they want. Next to last, we're going to talk about the list to sales price ratio. This is definitely a lagging indicator. Last week's list to sale price ratio was 98.6% of what they were listed for. Still a very strong number, still pretty close to in line by percentages. The last thing I want to talk about is the showing data. So this week's showing activity in the last 12 days, as you see from the graph for this, we had a serious depression in showings right after the COVID situation really started to take hold in the Midwest. Now we have seen a jump. In the last 12 days, we are up 43%, a little over 43% in showings. That is a lot of activity. The projections are that that's going to continue to grow for a couple of reasons. The weather's getting nicer as I speak. It's sunny and warm outside. People are really getting fed up with being at home. Buyers are anxious to get out for the spring market. There are all these forces coming into play that we expect that's going to be continued rise in buyer activity. The real trouble spot for that, not new seller listings coming on at the rate that we need them to be. So anyway, a lot going on. Whether it's good or bad, we're going to find out in the next few weeks. Right now, it's very solid. We are still putting homes under contract, and we are listing new properties. If you'd like information that's more specific to your neighborhood, let us know. And make sure to stay tuned next week for our new market update.